Good day, everyone. It's Cliff Hale-Sanders here from Voyager Metals, President, CEO, and Director. Here to talk to you about the Mont Sorcier iron and vanadium project that we have located outside of Chibougamau, Quebec. As will be highlighted, we recently completed a PEA, which underscores a very robust NPV of $1.6 billion. So I hope to educate you on what the project has and why the merits of having a look at it.
Love an education. So this should be a good session. Hey, so Cliff, thanks for coming on the show. First time we've met, spoken, etc. until a few moments ago. Can you sort of kick us off and give us a little bit about your background, please?
Sure. My background is I spent about 22 years as a sell-side analyst on Bay Street at the variety of the big banks. Switched over to the corporate world in 2016. Been working with our executive chairman, Mark Brennan, on a variety of different vehicles at this time. So this is our third one that we brought forward. So fairly busy, fairly successful at this point in time in getting these projects to fruition.
Okay, yeah, and if I look at the marketing material, you guys are, you're dropping a few blue chip names in there of projects that the team has kind of collectively been responsible for in some way, shape, or form. From Largo, Champion Iron, and DSM to name but a few. Given the size of your company, 18 million market cap company, with the kind of numbers you're indicating in the PEA, which we'll get to, you got to have a plan. And I'm just wondering, are there any lessons from the past which you're going to be bringing through to allow you to kind of help this company grow?
I guess there's a few things you could focus in on there. The team from Largo went all the way through from very early stage exploration all the way through to construction and production. That's a very long, drawn-out process, as any development process is. But we have the team that has ridden that whole process out. If you look at Largo, it's actually the Mont Sorcier project in reverse. It's a low-grade iron deposit with lots of vanadium, whereas we have a high-grade iron deposit with limited vanadium, but a good credit. So the actual process and involvement there is the same. The gentleman that we have brought over from Champion and Consolidated Thompson, these guys have 30 to 40 years experience within the Quebec iron ore business. They don't really need to be involved with our project unless they thought it had significant legs and growth and had the potential to be Canada's next iron ore mine.
Right. Okay. And so what is everyone doing? Because attaching names to projects is easy. Who's really adding value?
The key people in Quebec. Let me go from the top down. Obviously, Mark as executive chairman with the significant contacts of his 30 plus years on the company building side. He's been a serial entrepreneur in various mining companies. Hubert Vallée runs our Quebec project development team directly. He's ex-Consolidated Thompson. He is one of the first 10 people in Consolidated Thompson. They pushed the development and construction of Bloom Lake. He's brought a few of his associates along to support the team in Quebec directly. A lot of the other guys are on either the advisory committee or on the board to provide input at this point in time without being a significant cost burden to the company.
Right. Okay. And again, I come back to that small. This is the thing that people are looking at, right? Small company with small company problems with big opportunities. So some big names, blue chip names of individuals who've been involved in some big projects in the past, and I'm intrigued to see how they help you move this and get this thing financed. But that's a big overhead, isn't it? Because you haven't raised money since middle of last year.
Middle of last year, between we did a modest private placement using Quebec charity flow through. We also raised 3.9 million. Canadian debenture for 18 months. And really that's within the light of the market conditions at the time. We don't think our valuation is appropriate, especially when you look at our peers in Australia, primarily Australian for junior iron ore stories. Unfortunately, in the Canadian market, it is an educational process to get to the junior end of the iron ore space. A lot of misconception that it's for a big company process. It's actually a very straightforward mine. It's very simple. So from that angle, our funding right now, we have the support of Glencore with what we have a funding support arrangement, I guess would be not their money directly. They're introducing us to various people, and we're looking to secure some funding packages with them to bring us to the feasibility completion.
Look, I guess at the end of the day, it's what happens at the end of the day that matters. But the kind of journey on the way there can be confusing, and certainly for retail investors, perhaps. Question decision making, right? So like the debenture. Why go for a debenture? Why not standard equity raise?
Oh, it's a friendly investor, shall we say? So they were very supportive. It was again at that point in time less dilutive from our perspective as we continued our discussions and introductions with the support of Glencore. So it was a bit of a bridge to gap that process. Like right now, we're looking to finalize the funding package to complete the feasibility study. If the numbers are anything like what the PEA is suggesting at that point in time, we would expect groups like Investment Quebec, some other large Quebec institutions, and the market in general to be much more supportive.
Right. So it means justify the end, right? Is that
Yeah.
That's what you're saying? Like we interview a lot of Quebec was companies, and a very supportive province in terms of not just debt funding, but also on the equity side. So I guess it'll be fine in the end. But did you find? I mean, so the stock kind of came off the back of those sort of announcements last year about the type of funding. Would you say that? Would you put it down to that, or would you say something else?
I would have said the biggest thing that kind of fell off there. The junior market in general was quite weak. Iron ore prices had a significant pullback, even though it has no bearing on our current development program. We won't be in production until about 26, 27 at best, given the process that's involved. So we have quite a window there. We don't need the peak iron ore prices we saw. That's not required for this project. We'd be more than happy with today's prices, but obviously in the eyes of the market, people like high prices as opposed to a pricing decline.
Right. Okay. And so you explain to me about the Glencore relation. So it's not their money, but they're making the right sorts of introductions, and it's a nice name to have on a press release. But what does that actually mean for a company of your size or your stage to have them involved?
I guess there's two things. First, they want the offtake agreement. So they want a product that gives us a lot of credibility. The product has no issues in the market. They're also the world's biggest trader of vanadium. So if anyone's going to get us the vanadium credit, because we have a profit sharing arrangement for prices in and above the 65% iron ore index. Unfortunately, I can't show you that price because it's not a traded market. It's very, very focused. But 52% of the world's vanadium is produced from mines just like this around the world. So you can go to China, you can go to Europe, you can go to the Middle East. But obviously having Glencore there gives that the immediate product quality stamp of approval. And then obviously their ability to introduce us to a very wide spectrum of potential funding players. They could be strategic investors, they could be financial investors. It's quite a wide audience.
Okay, so that's on the vanadium side. In terms of iron ore, have they got expectations of you?
No, they want the offtake of the iron ore. It's a single product we would be selling, iron ore concentrate, which contains 65% magnetite and 0.52% V2O5, which is sufficient enough to make it economic to recover. You actually recover it in the steel blast furnace.
Right, and so what's the trade-off for you when you're having discussions with people like Glencore, who've got a reputation for being like pretty good negotiators, hard negotiators, and when you're starting from a position like yours, you're not in control of that in some ways. So how do you maintain or defend your position?
Well, that's why we haven't gone into Glencore and said, "Why don't you invest? Come take 20, 30% of the company." That's not what we wanted. We wanted them to have the offtake, and in return for that, introduce us to more passive investors, supportive investors, long-term investors who are looking to build the company, looking for the actual product itself, as opposed to just a trading vehicle. So it was using them as a marketing tool to a certain degree, but also the credibility of the product.
Right. So have they got any other optionality in there as a result of this, or you've managed to keep them sort of arm's length, except for the potential future offtake?
The contract itself is arm's length, industry standard. The initial contract would be for an 8-year term of offtake. If they supply sufficient capital or a significant amount of capital on terms we agree to for construction, then they could have a life of mine.
Right. So can you just explain that for people? Because there's all sorts of agreements out there, some binding, some not, some short term, some longer term. So again, how did you construct it to benefit your shareholders? Well,
we're working together in tandem. Technically, you could argue that the term has expired, but we are working with as the discussions can remain ongoing, and it's really just getting to the brass tacks of an agreement that we all agree to.
Right. Okay. So
minimizing dilution. Our focus is right now to minimize dilution because we don't have that valuation.
Right. Okay. I'm sorry, you don't have that valuation in the sense that. What do you mean?
If we look at our peers, and the value that is implied for this PEA, the typical valuation, correct me if I'm wrong from your point of view, 0.1 times NPV would not be a stretch, which suggests we should have a market cap closer to 150 to 200 million Canadian.
Right. Okay. Fine. Understood. But I guess you're getting that kind of discount because people are going to ask me the question, which hopefully you're going to answer now, which is how does an $18-20 million company finance something which requires $574 million worth of initial capex?
Yeah, I guess there's first, as I said, we'll conclude some sort of arrangement and get the funding sufficient to get us to feasibility. And I think that's where we daylight the value. After that point, and the timeline to development is clear because that's when you submit all your permits and applications to the Quebec and federal governments. That's when people get excited because now they know when they can be in production, when cash flow can start commencing. And I think with the numbers that we've presented there at reasonable long-term prices, getting 7 to 80% debt, with Investment Quebec, the government behind you, you're not looking at a really big equity ask at the end of the day.
Right. Okay. And just I want to get the vocabulary right. So you're talking about feasibility. Are you talking about pre-feasibility, or are we skipping to feasibility? Okay. Right. Okay.
Given the numbers were so strong at the PEA level, and the project itself is extremely straightforward. Their infrastructure is all in place. The railways, the ports, the roads. We don't have to worry about any of that. So our focus is solely on the mine. And iron ore mining, to be honest, is probably the easiest mining you can do. It's big. It is large scale, big trucks, big equipment, but there's no chemicals involved. It's just big magnetic separation. It's actually very clean from that point of view.
Okay. And you're talking about, obviously your open pit you're talking about. So, and I think you mentioned several places, they kind of low cost, long life of mine, etc. So you think this is obviously going to be quite attractive to investors in the sense that they agree with you. It should be simple mining, and therefore they will allow you to kind of skip a couple of processes here and get to the end point.
The real issue for the iron ore business is understanding the metallurgy of the iron product itself. We have no noticeable deleterious elements, whether it's phosphorus, aluminum, silica. They're all within the normal index ranges. So again, very clean product. It's a very homogeneous deposit. It's about 4.1 kilometers long by about 200 meters wide. It's a very simple process to mine in a large-scale open pit. The current PEA was only using roughly 40% of our known resources. So that outlined a 21-year mine life. Clearly, we could expand that and double it to 40-plus year mine life based on the resources we have today.
Right. Okay. And the expectation of you and your team is to what, get it into production stage and flip it, or flip it after feasibility?
Well, we're mine builders as a group, so we'll do what's best for shareholders. And if it's an appropriate opportunity, we'll do what's best.
Right. Okay. But you're mine builders. So the sense is that you want to get this into production. And is it a case of then? I'm just trying to understand the ambition here, right? So obviously getting something into production is hard. Making discovery is hard, but getting something into production and economic production of that is hard. What's the ambition for you guys? Is there more to be done?
I think the ambition is this could be used as a cornerstone to build a real company. So, whether we have a strategic investor who wants the offtake or how it evolves over time, this asset by itself is a company builder. We're looking at 21 years of free cash flow, roughly $250 million US, very steady state operation at very conservative long-term iron ore prices relative to today's market. So, as I said, this could be a cornerstone for what could be a very attractive opportunity for us or someone else. So it could play either way, but that's why we're very comfortable saying this is a company builder, and we'll bring it all the way through to production and operation. But that's the way the market beholds. Right.
Okay. I guess the question is always this: if you do stay in production, what do you do with the cash? How do you make $1 worth more than $1? I guess you got to invest it. But coming back to today's problem, so I think I've been mentioned a few times, but that's the big thing. It's what would you say to either your shareholders, because there's not a lot of liquidity at the moment, your existing shareholders who are still with you, and maybe some of those who have popped back for a breather, or maybe those looking in for good, strong iron ore projects in a tier 1 jurisdiction. Why is now the time to get into your story?
Well, just on the shareholder base right now, we actually have an extremely supportive shareholder base, which unfortunately results in the lack of liquidity because they know what we have, and they want to see it come to fruition as we do. So looking at this story, it is an extremely good value opportunity to get involved. We continue to get out there and sell the story. And really, it's a big educational process in the Canadian iron ore space and the junior market space, because it is not something that the retail investor has had to look at. They've looked at copper, they've looked at gold, more so than iron ore. As I said, iron ore has predominantly been a Brazilian, Australian story, and it just takes a little bit of time. And I think as we continue to get that next level of credibility, we'll continue to knock down those goalposts that we see for investors.
Right. And obviously the PA numbers are evident. You put them out. Is this project big enough for a major, or because obviously with money being tight, cash constraints, you've got to be sensible. You can't go off on a massive exploration gig. Is it big enough now?
As you could probably realize, we've talked to a lot of people over the last 18 months, and their biggest issue is to understand the timing. They all love the project. They've never had a negative comment about the project. It's like, when can it be built? Could we really understand the permitting process in Canada, because these companies are not always Canadian by and large. So there's an education for them to understand the permitting process. And it is a little bit elongated in Quebec. It takes about 2 years to get the permitting process through. So again, they want to see that time horizon. So finish the fees, submit your application. If there's no red flags from the government or the various community groups, that's where I think the excitement kicks in for them, because then they have a nice sight lines to development to production. As you indicate, a lot of these companies actually have been making tremendous profits for the last couple of years. And I think we're at the cusp of being that time frame to production, the snack bracket of capital that's required. It's not billions and billions and billions of dollars because of the benefits of the project. So I think we'll be garnering, again, more attention as long as these numbers continue to hold through. As you pointed out, a couple of things that came through. The PEA was obviously very robust, but the other thing we presented just before that as well was the updated resource, where we now have roughly 600 million tons of indicated resources, not inferred anymore, they're indicated. So the level of confidence in the resource that we can demonstrate to third parties is a lot higher than it was, call it, a year ago.
Right, but what I'm trying to work out is, does the scale match, tier one company expectations? Because they're looking to kind of backfill their own resource.
What I would say to that,
right?
What I would say to that is, we presented a proposal we think a junior company could actually fund at 5 million tons per year of concentrate production. Could the resource deposit support 10 to 15 million tons? Very similar to what Champion is today. The answer is also yes. Okay. That being said, if I was to come out with a capital requirement for that, it would be a much bigger burden for us to try to carry.
I understand that. What I'm trying to work out is who is the group that comes in with the capital, and therefore the size of that audience. As you say, that you need kind of competitive tension, but you also need people with strong balance sheets, right? Okay, interesting times. Okay, well, and so what are we looking forward to this year from you? Obviously, moving and funding feasibility studies is a big part of it. But what else?
I would say that's the biggest one. Obviously, we've come up with all the new news now with the updated resource. The new PEA, which really is focused in line with what the feasibility study will be designing, as opposed to some of the older scenarios that were out there. So that would really focus people on. Over the next, call it 6 to 9 months, obviously we will continue with the various work programs, whether it's on the environmental side to submit the environmental impact assessment state permit application, which will probably come in Q2 of 23, finish all the engineering work that goes into the feasibility study by the end of Q1 of 23 and get that out to the market. Outside of that, that is our sole focus, to deliver that the feasibility study. Obviously, we'll have to finish our funding package as well to give everyone confidence that we're going to do that. And that is something we continue to work on a daily basis.
Right. And you'd be, so just in terms of that funding side, and you probably said it, but I missed it, which is, what's the amount that you would probably look to kind of put together, and you would look at, I guess, different ways, different types of financing or different types of capital in there. So can you just run me through that?
The key, as we've said many times, the full package of the 2-year program to complete the feasibility study was roughly $10 million US.
Okay.
So we're halfway through that, but as you pointed out, we did raise a debenture, so we do have to clean that up in the new funding round that we're going to do, whether it's a combination of equity, project ownership, some other sort of alternative funding vehicles. You can pick your poison, but we've been discussing various scenarios. But our key issue here is not to dilute the company for the current shareholders by just issuing equity on a weekly, monthly basis. It's just not. As I said, we have a very supportive shareholder group who have done this before, and it does take some time and takes a little bit of patience. But the payoff at the end of the day is well worth the agony on the process.
Okay, so we're looking this side of Christmas potentially for that.
Yes.
Okay, fantastic, great. Well, look, Cliff, thanks for the run through. Like I say, new story to us. We'll dig into it a little bit deeper off the back of that conversation. Very interesting indeed. I appreciate your time today.
Great. Well, thank you very much. I'm glad to be here.